And it's time for markets, and let's get a check of those now. The June WASDE report offered some changes to the corn crop. Ending stocks are forecast to be at levels we haven't seen in a number of years. Other things we'll talk about today: no new tariffs from Mexico, but negotiations with China are still ongoing. And there's some signs the economy is slowing down. How will that impact beef? On Tuesday, I was joined by Dr. Scott Brown, an ag economist with University of Missouri Extension. We began by breaking down the findings from the latest WASDE report.
It's good that we see USDA now out talking about some of the changes, especially on the corn side. Today's report gave us a 10 bushel drop in U.S. corn yields projected for this year. So they went from a 176 to a 166 in the last 30 days. They also chopped about 3 million acres off of corn area planted this year. So the combination of things, about a 1.35 billion bushel cut in corn production expected by USDA this year. I mean, I think we're still early in the process. All of that raised USDA's projected corn price for the crop we harvest this fall by 50 cents. So now talking about a 380 price where they were at 330 before. It just reminds us of how much things have tightened up as a result of the bad weather situation. Ending stocks at now projected at levels that we haven't seen since 2013, 2014. So what an amazing change has happened over the last 45 days as weather has really delayed a lot of that corn crop, whether it's flooding or just wet in total. It's really created a very difficult situation, and I think we're going to continue to chase this corn crop until we get it in the bin in terms of figuring out what happens to yields ultimately, because even the corn we have in the ground I think's had a pretty slow start.
Yeah, you bet. As far as trade or ag policy, is there anything that you're watching closely on that front that you want to let us know about?
Well, I think when we look at the trade side, of course, the USMCA agreement is always one that's we're paying attention to. I guess I back up for a minute and say it's nice that we're probably not going to talk about any new tariffs on Mexico that might have caused them to retaliate on ag products for us. So it seems like probably going to get some more pork that might move to Mexico, hams in particular. But having that market without new tariffs in place is certainly helpful. And of course, getting a successful USMCA agreement in place should be helpful to U.S. agriculture. China continues to be the one we watch. If we can get a U.S.-China agreement in place, what does that mean with the cuts in the Chinese pork herd that we see today in excess of 20%, at least it seems like at this point in time? Their need for soybeans might be less than we saw earlier, but it doesn't mean a new China-U.S. agreement doesn't mean positive things for things like beef and pork in particular. As pork production in China is reduced as a result of African swine fever, our products might have a chance to see increases as we go forward here in 2019.
Yeah, and let's talk about cattle for a couple minutes. What are some of the top questions that you're getting from cattle producers this time of year? Because we are right into grilling season. What do you tell them?
Well, I think we need to keep watching the domestic demand front of things. If I had a caution, it's to be paying attention there. We know we've seen just a few signs of the economy maybe starting to slow. The last jobs report certainly wasn't as positive as we'd hoped. Consumer confidence fell a little bit in the last report as well. We need strong domestic demand on the beef side because we're going to talk about increases in beef production this year. We've got feedlots that are fairly full of cattle. So I guess I keep saying there's more downside risk in these cattle markets moving forward than upside potential. I suppose one of the real positives could be to come back with a U.S.-Japan bilateral agreement. I think that certainly could be helpful on the beef side, getting our tariffs that we face on products going into Japan on an equivalent basis with other countries like Australia, I think would grow that market. When we've seen the first 4 months of this year, beef exports below year-ago levels, it just reminds me that we're getting drag in terms of that export side, and we need all the help we can get on that beef side with the additional supplies that are going to be coming to the marketplace for the remainder of 2019.
Yeah, and there's just so much volatility all around. Any other marketing advice, risk management tips that you haven't mentioned that you'd like to leave us with this week?
Well, Troy, I think it's most important for folks just to decide to do some risk management. If they're waiting to hit the highs, if it's the prices they're selling, or hit the lows, if it's the prices that they're purchasing products for, I go, don't try to hit those extremes. Find a risk management plan that works for you and stick with it. At the end of the day, we hope we don't actually execute on that risk management strategy very often. We hope prices actually move in better direction than we anticipated. When you think of the crop side, I worry there's more upside potential in corn prices as we move forward. It's already been a slow start. We just really don't know what we're going to get as a result of the weather. Hay stocks at record low levels, and I have yet to find a producer at this point that's put hay up so far this year without it getting wet at some point along the way. So I think hay continues to be an issue, so feed costs could be higher. I worry there's more downside risk in cattle markets than upside potential. You know, if both of those things happen, we get higher feed costs and lower cattle prices, I worry about the bottom line for our producers in many parts of the country.
Dr. Scott Brown, as always, great talking with you today. We appreciate it.
You bet, Troy. Thanks for having me.